This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now to take a look at the market trade as we start off another week, we welcome in our good friend John Heinberg with Total Farm Marketing. John, good to talk to you again, buddy. How are you?
I'm doing well. Another beautiful Monday here in Wisconsin. It's been a great stretch of weather here last week and a half or so.
Yeah, it sounds like a lot of areas outside of maybe the Southern Plains, 8, 9, 10 inches of rain, had some pretty decent weather here over the weekend, some hit and miss showers in a few areas, but overall not too bad. Looking at this market trade, let's jump in, John. For the most part, grains were higher today. Soybeans, meal, wheat, kind of the leaders. What do you think? Was this just some fun-driven money coming back into the markets to start off the week, John?
It kind of felt like it today. We got a little bit of money flow moving into the markets here last week. You're seeing managed money positions grow a little bit here. I think that talk of the Chinese weather and their drought issues really kind of surfaced out. Came a little bit more forefront to bring at least some, maybe some squaring up and a little bit of money flow that there may be some demand coming. So that's kind of what we were watching, I think, here today. Then on top of that, we had a good solid close the last week. So we got a little bit more follow through in all three of the grains today. So that just kind of helped build this up a little bit more. And then obviously, too, we got to keep an eye on what's going on in terms of the media side of things with the Pro Farmer Tour and the other crop tours that are out there right now, starting to maybe see some results. And maybe that brings it even a little extra bit into the market if, again, we're watching some of those Western numbers kind of look a little bit shaky, at least in some of the pictures that we've been seeing again on social media today.
Well, and you mentioned the Midwest crop tour there, getting a lot of the media attention and headlines this week. I was talking with someone else wondering, how far they're going to get into some of those really bad areas we know of, which they don't, Kansas or subparts of far western Nebraska, southern Nebraska, southwest Nebraska, et cetera, or some of the areas even farther to the north, wondering about, North Dakota, South Dakota, et cetera. But, we look at the tour over the years. This has always been a hot topic this time of year. And I wonder, without looking at numbers, how much it has really affected the trade and now how much it could affect the trade. And you made a great point, just some pictures on social media, how that plays into our new kind of algo-driven markets versus, maybe 5-10 years ago where it really wasn't a factor. So I think that's maybe something interesting we have to watch for, a couple of those points there.
Yeah, we're a very headline-driven market right now. And again, realistically, in the big picture of things, Pro Farmers Tour just as another snapshot of what the numbers could be. But like you said, they don't cover all those areas. And you're talking about some of the negative areas. And I was on the road this weekend and drove from Milwaukee to Rochester, Minnesota, and I saw absolutely amazing crops all the way through that stretch. As Wisconsin's got some of the best rated corn in the nation this year, and it carried right into that corner of Minnesota as well. So that's an area they don't test, and so again, so it takes a little while to balance that all out. But again, we do have a market that does trade very quickly off the headlines. And then some of those headlines maybe started coming through today. Some of those pictures came through. Not sure if that's really what caused the corn market to just kind of start catching a little bit of a bid after a kind of a difficult start. I think to me it was a little more spillover from that wheat market and that bean market strength today and just some of the money flow that was there. But again, these markets are going to react very quickly to those headlines. Now, tonight we'll get crop ratings. What if those improve a notch tonight just because of the rains from last week, or if they drop a little bit more? Right now we're expecting unchanged basically week over week, so we'll see how that plays out. But again, that could just bring us into some money flow one way or out of this market tomorrow.
Well, John, you mentioned China earlier. I know that's something we're watching closely, and we'll get to wheat in a second. I have some thoughts there with China and wheat. But on the soybean side, meal side, what are your thoughts on that market? Is it some of the China concern really leading the beans here? on Monday? Because it felt like around 9 a.m. on Monday, both meal and beans kind of just took off looking at the chart. So I'm wondering what the maybe the headline was, or what you saw more specifically in soybeans on Monday that caused the move to the upside.
We'll probably continue to watch the demand side of the equation. We got export shipments were a fairly solid number again as we're getting close to the end of the marketing year. So that's always encouraging to see those numbers kind of come through. And then again, too, we got the Chinese weather. Will that come into play in terms of some demand side for both corn and soybeans? We got the July export data from Brazil, which was down a little bit, year over year. So again, is that a sign of lack of supplies in Brazil? And we, right now, again, we still got the most affordable bean basically from September till the end of the year. So, we'll continue to watch how that plays out. Watch the cash market here. Watch those shipment numbers. And I think, again, just brought a little bit of optimism despite some of the kind of shaky economic numbers we got out of China that kind of pushed that stock market over on its downside here, starting last week and getting some real strong follow through to the downside today, as we're just concerned about the Chinese economy in general as they made that, move on their prime lending rate, cutting those interest rates, pumping some more liquidity into their economy just to kind of help fire up the growth side of things, especially in their housing sector.
John, a little more on China. This could go into the wheat markets as well. I heard some rumors out in the trade that China may have bought some French wheat today, and they're also maybe looking at some other countries' bids. I wonder, was that part of the reasoning that wheat was strong? Because, typically we see the U.S. dollar go higher and we don't see wheat go higher with it. And I thought that was a bit of a head scratcher today.
Yeah, that was one of the things I was looking at too, just in the grains in general, is just the strong dollar move today, kind of getting back to those near-term highs. And we made a pretty strong move over the last week or so here in that dollar index. So does that become a limiting factor? Again, we'll watch. But yeah, there was talk that China was in the European wheat market today, looking to pick up some supplies. Plus also, we oversold that wheat market last week with that hard break to those new near-term lows. Still kind of keeping our bottoming action in place with the move back on Friday as well as today. So we'll have to see if that can continue to push out. Obviously, watching the weather as we get ready for some winter wheat planting in those southwestern plains. Still a lot of dryness that needs to be cleaned up in that regard, as some moisture has moved into some of those regions. But again, overall, so that wheat market, it's just had a really good response here. Maybe a little bit of technical follow through again after that strong sell-off early last week and finishing strong coming back on Friday, and some follow through today. So, wheat put itself on sale, and maybe we saw that decent shipment number here too from the United States. Now we need to see if we can get some export sales to kind of pick up. But again, that strong dollar move today really kind of had me scratching my head, at least in terms of the action of the grains overall today.
John, corn and beans, we look at the calendar, some of those spreads start to invert here as we start to get, dwindling old crop supplies, move to the new crop some more. Looking out there, though, still looking like solid demand. What are your thoughts here as we start to, move more to that new crop and out of the old crop time frame here in corn and beans?
That's going to be something we got to keep an eye on, especially on the cash market side. Watch your individual basis. Again, we've got stories on both sides of the coin out there. Some of those areas that are going to be corn short, are going to have a tough crop coming in this year. The basis levels are going to stay aggressive and try to keep buying supplies in. Areas that are going to see some pretty good production, they're going to start seeing those end users maybe shift off that old crop to that new crop mentality. That'll come into play on the basis. Again, that's probably that window in here where we kind of see things shift around, at least getting away from that old crop mentality, which is one of those windows that makes me cautious of this market. We typically see that selling pressure in here in this window just because of those types of moves. So, it's going to be based on your individual market. Again, if you're sitting on old crop supplies, you got a good basis in front of you. Don't be afraid to pull that trigger. If you want to stay in the market, there's a lot of good value out there longer term. Take advantage of some of those calls and call spreads just to keep that ownership in. But again, stay active if you got supplies here and you need to get things moved out of the bin to get ready for harvest. Just stay focused on what that market's going to be in front of you on the cash side.
John, let's talk a little more on the financials as well. I know you brought that up a few times. Stock market really kind of taking a beating on Monday. Energies, crude oil moderated a bit, but we've seen plenty come off the crude market. You look at the outside macro markets, I guess the biggest probably news would be the stock market taking that pummeling on Monday. Any thoughts there?
And then again, that was probably some of the trade, I think, today too. It felt like we had some money move out of that equity market, and it came back into the market that was probably the most pressured recently here, which has been the grains. And so that was some money flow action there. Typically don't see a day where you got all the grain markets rallying aggressively higher or strongly higher in this case, like we had today, or just good overall movement. You got crude oil down, you got stocks down, you got the dollar surging higher. That usually isn't a combination that we see. So a little bit of a divergent there today in terms of its trade. Stock market kind of softened up at the end of the week last week. Again, concerns about recession globally, Chinese economic data. Got that little push again last night on that Chinese information, and we saw prices break down, testing some pretty key support. Now, if that doesn't hold, there's another 1,000 points probably underneath that Dow futures, and that Dow market easily sitting there. So we'll have to really kind of watch the next couple of days. We kind of had a really good recovery here, and the question that's been going in traders' minds in the equity markets, has that been a reversal off the lows or just a bounce in a downtrending market? So this is where we're going to maybe get that answer. That's something that could have ripple effects throughout. Again, you look at the rest of the commodity space today, realistically, the grains were the strength and got a little bid back in hogs, but cattle was pressured, cotton was pressured today. So again, it felt a little bit risk offish except for the grains.
Well, John, as well, we have the Jackson Hole Symposium going on this week. A lot of Fed officials and CEOs, et cetera. And I know Fed Chair Jerome Powell is supposed to speak on Friday. To me, it seems like that's going to be probably the day where we're watching the headlines out of there closely in the market. Would you agree with that?
Yeah, we'll see if there's any changes in their demeanor and their mentality regarding money flow. And the Jackson Hole meeting won't have that big of an impact, unlike just the regular Fed meetings where we truly get that dialogue. But again, we talk about a market that trades very quickly here in terms of its news and its headlines. So anything that comes out of there, negative or positive, could give us some reaction. So obviously something that's going to be on the table to go with all the other things going on Friday between Pro Farmer Tour, and I haven't mentioned it yet, grain options expiration for September options. Those are always fun times because those markets try to move around and get after open interest positions. So there could be some pretty good volatility as we go towards the end of the week because of those headline factors.
Well, now let's stay on that grain options topic just a little bit here, because obviously, we look at September contracts. They're usually not heavily traded, but they can be. And we think just about the time of the year. We think about the state of the markets. Remembering when we have those option expirations might be wise for some guys and gals to maybe have a little coverage, a little protection heading into those in case the markets do want to move wildly one way or another, John.
Very much so. If you go back and look through the options expiration window, especially markets like a bean market where things can fly around pretty quickly, market has a tendency to want to gravitate to the largest areas of open interest just to basically kind of kill some of the premium that's in that market. So we'll have to watch where we are. Again, we've seen some very aggressive moves on those days, and it just kind of tumbles through one strike to the next as it continues to zero out option strategies that are out there. So that could be something to watch. Probably a little bit more of a corn factor than is in the other markets, being more heavily traded. But we'll still have to keep an eye on all three grains as we get into the expiration here on Friday.
John, let's move over to the livestock trade. Cattle on feed report saw that on Friday. For the most part, it kind of looked bearish, I guess I would say, although some people argued that a little bit. But I'm wondering your thoughts on the cattle on feed, and then also the follow through on Monday. If it was that bearish, expecting a gap lower, we really didn't see that throughout live and feeder cattle on Monday, John.
Well, the initial reaction to the numbers were negative. That placement number came in a little bit higher than anticipated, obviously well above expectations and even above the analyst range. And then total cattle on feed numbers a little bit heavier than anticipated as well. But, you start breaking things down, you go look at the particulars of the report. First off, you're talking lightweight cattle where the cattle place. A, they're coming out of pastures because of poor conditions. B, because of the cost of feeders. Some of these producers are having a hard time securing and don't want to pay up for those heavier weight feeders. So they're going to the lighter cattle, getting them in a lot, and then managing their inputs on that side. You look at a jump 30, 40,000 head over last month on those 600 pound and less weight feeders. And that's where that big placement number came from. Plus, what else type of cattle are they? They're getting imported, they're coming across the border. They Holstein mixes too as well. We've seen these cow numbers for beef continue to decline, so I'm not quite sure that we're getting numbers to mesh up in that regard. So that just brought us at a little bit of an overinflated number into the market, which obviously is still long-term friendly here. So that's why we probably saw some pretty decent support today. In fact, we did try to turn the market green, but then the corn market kind of kicked in a little, and I think that's what put the final push in. You go to that live cattle side, yeah, the cattle numbers are up a little bit. That's what weighed on October and December contracts today. But then we're going to be focusing on that cash trade. That's still going to be the strength of this market here in the near term. Sounds like bids are going to keep us firmer than last week, at least an initial thought process. So that's still going to keep this market supported. To me, the weakness this morning provided an opportunity to maybe get a little bit of length into the market, especially if you've moved some cattle or got some targets going forward. Get some call strategies in to sell into. That way you got your price flexibility to the upside if you got cattle that are going to be getting moved out here. Because right now the cash market's still telling the producer that, hey, we need cattle. And, there's some good strength there overall, disconnected from the board.
John, how about the hog market? It was a rough week last week, and we saw a little bit of firmness come back into hogs on Monday. Is that a sign? Have we found a bottom here, or is this just temporary? What are your thoughts looking at hogs?
At least the starting process for that bottom came in today. Obviously that was another reflection of how quickly a market can take value out on technical selling. We really didn't have anything big on the fundamental side. Now, we did see retail values kind of roll over last week. We saw the cash market get choppy and soften up a little bit last week, and that was just a trigger thinking that maybe our fall high is in hogs, and they took the money out very quickly. But then reality probably set back in today. We saw strength in midday retails. We saw strength in direct cash on the morning. You got cash still pushing 120 plus, and they got the October board down at 90. Just didn't jive, so that's why we saw some pretty good buying come back in today. So we put some reversals in on the daily charts. Now we'll see if we get some follow through. Maybe it's a V-bottom situation here, because the hog market, like the cattle market, still looks good in the longer term given the supply situation as well as just the overall demand.
Well, John, great stuff as always. Before we wrap it up, I will open the floor to you. Any final thoughts or anything else you want to share with us here before we run out of time today?
I think I said this last week too, and given what the crops are out there, we already talked about areas that got issues and the areas that are strong. Make sure you're focusing on marketing your crop in your area. That's going to be the biggest key. We're going to see a lot of cash stories out there this year. They're already starting in terms of areas that know they're going to have a poor crop. End users are concerned. They're going to be chasing after corn bushels. But if you're in an area that's going to have a pretty decent supply, it's going to be a totally different type market. So again, make sure you focus on what's in your backyard when you get your marketing plans together. If you got a good crop coming, we get a little strength here in this market, probably make sure you get some more things covered. Just protect yourself. Again, keep that price flexibility to the upside if the overall market needs to go higher. But again, we're going to have a very regionally based grain market, it feels like, this fall going into next year, just based on what we're seeing out there for potential production.
Great thoughts to consider. John, if folks need a little advice about their operation, I know reaching out to you and the folks there at Total Farm Marketing is very easy. How can they do that?
Love chat with them anytime. Give me a call, 800-334-9779. Shoot me an email, jonh@totalfarmmarketing.com. And again, don't forget about our website, totalfarmmarketing.com. A lot of great information for producers to take advantage of. Again, it's going to get busy here pretty soon, so make sure you're staying on top of the knowledge side of things as we're getting closer to harvest.
John, always great to talk to you. Good, sir. Have a great rest of your week, and we'll talk to you next week.
Sounds good. Have a great week.
John Heinberg with Total Farm Marketing, our guest today on Market Talk. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.